Got the best gold trading strategy in the game. 8 straight wins, $26,000 live. Gold is at all-time highs, all because the government is printing too much damn money, devaluing currency, and making gold fly high. But what does that mean for us? It means easy trade setups. And I've got the perfect trading strategy to catch pullbacks and enter the market at the perfect time every time on gold. So smash that like button, subscribe to the channel, and let's make some money. Here we are in my live trading account from the past few weeks. Day 1, day 2, day 3, day 4, day 5, 13.3%, $26,000 profit on a $200,000 deposit. And of course, I'll show you every single one of those live trades later in the video. But first, let's get into the strategy. Since Valentine's Day right here, it's been an explosive move to the upside on gold, hitting all-time highs. Over the last 2 weeks, my strategy has been perfect to the tick. Every single trade I'm going to show you today is from the VIP gold room, but I know not every single one of you have $50 to access the room, so I'm giving you the trading strategy for free so you can do this yourself. So how am I taking advantage of this huge uptrend? It starts with multi-time frame analysis, which is why I'm showing you the daily time frame here. So the first thing I'm doing is setting up my support and resistance on the daily chart. You can see this is a good level. Price breaks through, uses this level as support, breaks through, uses this level as resistance, comes, breaks through, uses this level as support, and then up here as resistance. This is giving me a range to look at. As I play this out right here, you can see exactly what I was looking at on the day. I came below this level right here, but then I broke through this level and the candle closed right here. With the candle closing above my support, I'm bullish on the day. And really, you know I've been bullish on gold because we've been in that huge uptrend. The next thing I'm doing is I'm coming to the 4-hour time frame. And what I want to see on the 4-hour time frame is a reaction to my support level right here. So let me play this out. You could see we're starting to respect that level, and then we get the explosive move out of that level right there. At this point, I'm coming down to the lower time frame. This could be the 15-minute, the 5-minute, the 1 hour. Right now, this is the 1 hour time frame. So you can see here, I play this out. I got that explosive move. Once I get the explosive move, I'm waiting for the price to pull back so I can get an entry at a good price, at a discount. So as this price pushes up, you can see we have a 3-candle pattern creating this fair value gap. What that means is you can see this candle right here does not mitigate the candle before, and this candle right here does not mitigate the candle after, creating unmitigated price at this level right here. Now, I know a bunch of you are saying, hey Pat, why not take the trade off of this demand zone right here? Because you've watched a lot of my videos and you're really smart if you thought about that. But what I'm doing on this trade right here as I play it out is I'm waiting for the price to tap my fair value gap. I know that the price isn't always going to come down to my demand zone because we're in such an aggressive uptrend on gold. So at this point, I tap my fair value gap. I entered my trade, smashed my first take profit. You could see I continued up, smashed my second take profit, and this was a huge trade, over $6,000 gain. If we go back into my FX book, I can scroll down and show you this position right here. This was the second position. I made $2,200 on the first trade, and I made $5,800 on the second trade. Obviously, I'm going to show you the first position here, the third position, and the fourth position as well, all using the best gold trading strategy in the game. So let's get into the next trade. All right, so here we are in my next trade. We're starting with that multi-time frame analysis. Here we are in the daily time frame. There's really not much to see here. I have my support and resistance set up. I'm still bullish, but we've got to go to the 4-hour time frame to really get an idea of what's going on in the market. You can see I have my support and resistance set up. Price broke through here, retested this area as support, broke through, retested the area as resistance a couple of times, broke through, tested this as support, support, and stayed above this level, giving us a large wick here, a very large reaction, which is when I come to the lower time frame. Here was that reaction right here, and you can see we have some fair value gaps, but the big fair value gaps are really up here, so not really giving us exactly what we want. We do have a break of structure here, and so this is starting to look more like what? A demand setup. The last time I gave you an entry on a fair value gap, this one is looking more like a demand setup. You can see we have our demand zone at this level right here. We get a huge push out of this area, so we want to see the price come back down to that level. So let me play this one out. You can see price comes to our level, taps in, starts to respect that level very, very quickly. If we pull out the Fibonacci here and we pull it all the way from the bottom to the top of this move, you can see we are below 50%. The price is coming right into our discount zone, so this is a very, very good price to get into a trade. We're catching it at a discount, so let's go ahead and play this trade out. You can see we get a good reaction, smash the first take profit, and then smash the second take profit shortly thereafter for over $6,000. Now you've got to have discretion when you're trading. You can see I showed you one fair value gap entry, I showed you another demand zone entry, and now I'm going to show you another entry. Here we are with our multi-time frame analysis. Once again, you can see here we have our support right here, we have some more support at this level right here, and it's clearly holding. You can see we broke through the level, we've tapped the level, we've got the reaction looking good. Let's move to our 4-hour time frame because we're obviously bullish. You could see here we had a big move up, created our range, a big move down. We're clearly respecting this level of support right here, so I'm going down to that lower time frame, and on the lower time frame I'm always looking for this pullback. You can see right here we had a big push up right here, and then we had our pullback, right? So if we pull out our Fibonacci, we go from the bottom to the top right here, you can see we're clearly at a discount zone. We're below that 50% mark, so right here we're catching price at a discount. This is a nice place to enter a trade. But what am I looking at here? Well, I'm looking at support at this level right here. You could see price came down, tested this area of support, and then started to push up. This is when I decided to enter the trade here. Now, you can see I had my fair value gap right here. This isn't exactly a perfect fair value gap entry. This would be more of an inverse fair value gap where it breaks through, comes up, retests the level, but I was confident in the position, which is why I entered when I did. And you can see price quickly pushed up, smashing both my take profits almost immediately, and these were solid take profits. I was targeting past price action right here. I could have targeted this high right here, but I exited manually because I saw a lot of consolidation back here, telling me the price was possibly going to face some resistance at this level right here, so I played it safe. And you can see price did push up past that level, but did slam down immediately after that, so it was good to be safe rather than sorry. Now, I had one more position here, and I'm just going to show you this one quickly. You could see we had a huge move up right here. This created a fair value gap at this level right here. We bounced off of support right here. I decided once we got that big push up, we had a little bit of displacement, that I wanted to enter this trade. You could see I smashed my first take profits, smashed my second take profit very quickly for another